There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hello, everybody. Welcome to Hard Money. Good to have you along for the show again this week. John Scholes here. Darren Long is right there and answering all of your questions anytime. You know the number, 1-877-323-GOLD, 1-877-323-GOLD. Real simple, deltaharbor.com, Harbor with you. This investment is all about you, so travel over there, educate, learn, and go to YouTube as well if you want to watch the video cast of this particular radio show, youtube.com/Delta Harbor. It is the season of change. That's what we're titling this show this week, Darren. Lots of good stuff coming up here. You know, it's funny. We started last week's show with the question of, what gives? And, came to gold and silver pricing, not moving up with all the inflation talk. And lo and behold, 1 week later, who comes out as the winners? Gold and silver. Your crystal ball is shiny and bright and very accurate, pal. How's the week been for you guys?
Well, I might have dropped that crystal ball a few times every now and then, and sometimes I might have even thrown it, but this week was a great week. Second busiest week on record for our firm. And that's just a testament, not only to the fact that people are listening here on Sauga and to our podcasts and to the show in general, but people are getting a little bit more concerned with what's happening. We're going to talk about it, the season of change. And it is just that, John. When I thought about all the news of the week and how busy we had been, and I took the questions clients had in totality, I threw much of that into the preparation for this week's show. And we said last week that people just had to have a bit of patience for gold and silver because all the variables that we needed to see higher pricing had already been in place. We had talked about inflation. We talked about the possible shortages, interest rates, being held low because they don't want to start raising them because they know it'll kill the golden goose. All these things that played a role in determining where this next phase would go with gold and silver. And this story continues to unfold, and we don't need to do anything right now to change it. It's going to happen whether we do it or not. It's just that having these assets of physical gold and silver prove to be good ways to ensure wealth, to ensure future gains, and to add some diversity to your portfolio. So gold popped this week. You're right. Up to the 1850, 1860 range as we speak from the 1780 range last week, while silver moved up to 2530. And that is a huge jump. We were talking last week at a price of around $23.50. It's almost a $2 move up, and it stands to reason that this is silver playing out its well-known story, which is I do not wait for anyone. No investor, no person, no individual, not even the folks at Delta. So it did move up. It's a nice buy range still for both gold and silver. I'm hoping, crossing my fingers, that those are looking to get on board, get some more buying opportunities below this range, and I'm sure they will. But we kind of moved ahead. It's a big week. There's lots technically that's happening. It's a reminder that both metals, in fact, honestly do wait for no one when they ascend. Our clients are accumulating, and they're using this as an opportunity to be better prepared for what lies ahead. And this week was an inundation of sorts. And as I said, our second busiest week on record. So a big fat welcome to all of our new clients this week, those that are in play, those that did actually get into the market. Popular products of the week, John, were the 1 ounce RCM gold bars and the 1 kilo gold bars. Those were the two popular products of the week, sold a lot of them, and continue to have a lot of requests for those products.
Take advantage of those and other products as well. Pardon me, it's just a phone call away, really. 1-877-323-GOLD is how you do that. Speaking of inflation, Darren, it's like it was right on cue, right? It looks like the U.S. is up, creek without a paddle. And more on that with you. I know this. You're shaking your head going, yeah, I know.
That's every week. It's seemingly the same thing. We're watching this story develop as we've been part of it for a very long time. And it took a lot longer than we thought. But when you lay as much foundation and hard work and the money printing and the loss of monetary principles as the federal governments around the world have done, The outcome is simple: inflation. It's going to eat away your purchasing power. It eats away all of the great wage increases that there could potentially be. It really plays down the whole added nuance of what $15 minimum wage an hour in Canada means. And according to the latest inflation report in the US, the rate of inflation this week reached a staggering 6.2% over the last 12 months, which is by way of 31-year high. And at street level, by proper measurement of the old ways that we used to do this prior to Greenspan in the US, and back to the days when we measured it properly and we didn't exclude certain aspects that made it look better than it was.
Right.
It's pegged street inflation in the US at around 10 to 12%, while here in Canada, it's around 8 to 10%. Now, tell that to your boss next time you're going for that cost of living adjustment on a yearly basis. And it looks like Jerome Powell, the head of the Federal Reserve in the US, he remains fairly steadfast on calling this transitory, but has extended that definition to the point that's saying it's longer term transitory. I don't even know what that is. I mean, he sounds like an absolute idiot saying, I don't know who's listening, his banker buddies, but ultimately we hear that use the everyday services and products know this is an inflationary environment. He's a complete idiot for saying it. And almost every single sub-index was higher. The biggest factors in the record-setting jump were energy, shelter, food, and new and used vehicles. So policymakers tend to like to strip out the impact of food and energy costs from the overall inflation rate because they can be so volatile. And even by that metric, the U.S. inflation rate was at a 30-year high. So even after taking out oil and food, the things that we use the most of in all the products that we touch and use on a daily basis, it's still at a 30-year high. So after plummeting during the pandemic, inflation has come roaring back around the world for a number of factors, chiefly government support programs aimed at keeping people employed, from CERB and the extension of CERB, now called something else, and the other ones in the US that did the same thing, the business support, all of those various programs they put in place during the COVID pandemic and now coming out in different ways. It's coupled with low interest rates, and that has flooded the world with cash, which is looking for somewhere to be spent. Also, you've got ongoing pandemic lockdowns, which are creating shortages of certain items. We talked over the last few weeks about supply chain problems, and this has made it hard to find certain items, and it's caused much higher prices for whatever's left. Throw in those supply chain kinks and problems of inventory with the whole world moving to a just-in-time inventory system, and the outcome's simple: higher inflation as far as the eye can see for as long as I can see going forward.
Well, I mean, you've said it right too. Inflation not transitory. It's with us to stay. But what about interest rates? Will central bankers not just pop the rates, throw the brakes on by raising the interest rates? Can't they just do that? Sounds simple, or too simple, maybe.
Well, I mean, again, it is what they typically do. It's a traditional thing, right? But first, the central bankers taper their bond and mortgage-backed security buying platforms, which happened in the U.S. last week and the week before in Canada. And so that's the first step in trying to quell inflation by stop putting all the money into the system. And that's really what they do as a first line of defense. But those interest rates, well, we know they're bound to go up and way up. They will have to go, especially since they cannot run the risk of moving them quite yet. And that's what's happening both in Canada and America. Banking heads are publicly acknowledging that they're all right with inflation creeping higher. They're all right with it running hot, as they call it, for the moment, because they both believe it's transitory. They're basing their hunch on ideas that supply and inventory levels are going to return to normal. And that's a huge, huge piece of wishful thinking. If they move too soon to raise rates, everything becomes more expensive, and we ultimately take from a shrinking pot of cash flow. It kills housing, it kills lending and borrowing, it kills credit, and much more. So this is why we are now seeing assets like gold and silver start their ascent back up.
Got to take a short break, Darren. And for you as well, you want to reach out to Darren and his team, get educated on this part of your portfolio, which is probably lacking at this point, which is cool. You still got lots of time to get in there and fix that particular problem. 1-877-323-GOLD is the way to do that. DeltaHarbor.com as well. This is Hard Money. We'll continue right here on Sauga 960. Welcome back to Hard Money. Darren Long here. John Scholes as well. Good to have you along for the show today. If you're concerned about your portfolio, your investments, your money, the future, well, you've tuned into the right hour for sure. It's simple to reach Darren and the crew at Delta Harbour, deltaharbor.com, Harbor with a U, and get investing, gold and silver, physical assets. You can hold physical gold and silver. I want to remind you of that every time we talk about it. And 1-877-323-GOLD is the way to call through on the phone lines. There's also the e-store. You can start investing from the comfort of your own computer in your jammies and get that portfolio happening with some physical metals. Darren will give you more details as the show continues in that regard. So the situation, interest rates rising. It's bad news. It could be scary for a lot of people who aren't on the cusp of doing what you do. But from here for gold and silver, what do you say?
Well, first off, yes, that's going to continue to be the threat. I think people push the envelope as far as they can. So stock markets will continue to rise. We're going to talk a little bit about Asian contagion and later on in the show, but as some of that money becomes too high risk in other parts of the world, it'll continue flooding into the US. And what I want listeners to consider is that a lot of people will ask, well, can gold and silver go higher in price at the same time the stock markets are rising, the same time interest rates are rising? And what I would say to them is yes. And we have a recent important piece of historical data that shows us the proof. Between 2002 and 2008, if everybody remembers, up to the great financial crisis, interest rates here in Canada and in the US rose to fairly high levels. In fact, I believe that we got almost just a stone's throw away from about 8.5% in the US. And there was little to no threat of inflation, and gold and silver prices went through the roof during those 6 years. The economy was healthy. People were out buying for speculative reasons, that is gold and silver, primarily because they were so depressed for so long. And now there is an unhealthy economy. So the complete flip-flop of that. And we've got debt, the likes of which we've never seen, which is a serious flaw that has resulted in threats of long-term inflation. And we talked about stagflation a few weeks ago, as we have discussed. And we're all still walking around worried about COVID, when behind the scenes, this is the greatest manufactured transfer of wealth from the middle class that the world has ever witnessed. And we used to talk about that, John, you and I, and doing shows back in the day in the early 2000s. We were discussing 2008 being the greatest transfer of wealth has continued on for another 12, 13 years. And here we are. Purchasing power is decreasing as we speak. We got a standard of living, which is on the cusp of decreasing because of the threat of inflation. We have supply chain worries and we have lack of inventories, which means we are paying way more for everything. Gas prices are rising along with taxation. And we've soaked every last little squeeze out of the stock markets that we possibly can, to the point that brokers the world over now stand in their offices in the morning and use a dartboard and they throw a dart to pick winners, because that's all they have left to do. You can't figure it out anymore because they don't know what fake money is going to do that particular day. It's become such a small body and percentage of folks in the very, very upper echelons that control the banking system, that control the outcomes that we see every day. And so I think that demand continues to exceed supply for gold and silver. I would say to people, beware of the holiday rush, which has started now. So get your orders in now, get an account open, get that registered account going, and expect delays, because this is the world we live in now, where anything you want is either on order, back ordered, or is still overseas waiting to be shipped in a container. The same can be said for certain parts of the bullion industry with gold and silver.
You know, it's so true. Again, that number 1-877-323-GOLD. Make that call, have a chat with Darren and his team. It's like not that we're buying a ton of stuff, but to your point, we already finished Christmas shopping for my daughter, and it's November, second week in November. We're not risking it. We're scared. Wow. And based on food prices, I mean, there's the obvious health benefits of it, but I will not. I won't buy a steak again. The price of animal products, to your point, Darren, I'm going full vegan in the next couple of weeks. I mean, there's other reasons why too. It's healthier, but I go to a butcher shop or a grocery store, and the price of meat is outrageous in other products. It's simply crazy. And the people, to your point, haven't woken up to this yet, man. They are in for a really, really dark surprise. But getting gold and silver into your hands, and I mean that physically, holding it. It's nice, it's cold, and it's heavy. Portfolios, how do they get them open with Delta Harbour?
Well, first off, we're going to talk a little bit about it further in the show, but our e-store is open for online shopping.
Love it.
So obviously for those that want to spend smaller amounts of money, let's say, less than 5,000, you can use the e-store, shop comfortably from the comfort of your own home or car or work or wherever you are. Certainly if you're driving, pull over, please. But you know what I'm saying? It's easy to do, convenience on the mobile, on the computer, and you can look at our product lines. The pricing is live. It's there, Canadian and US pricing.
Love it.
You can get that. And if it's over 1,000, it's free shipping to home. Otherwise, it's a small amount. Or you can pick it up from offices once it's ready. If you're buying a sizable amount, you want to come in and use what is at the real heart of what we do as a firm, which is connect with clients, establish a relationship, help them through this process, holding their hands and making them an expert. You can set up a storage account, and that's easy to do as well. You can store your bullion. You can have regular audits. You can also make changes by phone. Keep your liquidity there. It's a really easy thing to do, and storage does not cost a lot. It's 1% for storage in our regular accounts. You can do the registered accounts. That means putting gold and silver into your TFSA, RSPs, liras, RIFs, lifts, as you always say at the beginning of the show and throughout the show, John. An easy and great thing to do. And we're going to talk a bit more because we've been spending some time during each show talking about registered accounts, and that's another way. Or you can use our option of collateralized financing in our bulk bullion accounts. Again, a foreign concept to most people, but it allows you to lay down as little as 20% of your purchase. You want to control 100,000 worth of gold, you can lay down as little as 20,000 to do it, plus the cost of doing business for that bullion premium. But other than that, it is easy to open up an account. Our website talks about all of them, so you can get started right there on our website. It's easy to do.
Again, deltaharbor.com. That is Harbor with a U, to do your own research and reach out to the guys and the whole team at Delta Harbour and 1-877-323-GOLD. Just to go back, and I love the registered account thing, because this is so cool, because a lot of people already have these at their fingertips. They've already used them for something, whether it's a TFSA or RSP. And the chances are, unless you're really studious, you've got room, especially in a TFSA. And just to be clear, again, because it's a TFSA, because it's something you would see on paper, a statement every month, that does not mean it's paper, gold, and silver. You're still using physical product, even through your registered accounts, yeah?
That's right. It's physical bars and coins, and there are a few options there for you as an investor, whether it's in the TFSA, RSP, and you can bring it over from another bank. If you're currently with another institution, no problems. You can bring it over to us. We'll show you how to do it. Our partner in this is Questrade. We use the same storage facility we use for our own storage accounts, and we'll set up the entire thing with you right there, hand in hand. And it's a delightful way to take advantage of those tax shelters that are put there for us to do so. And the TFSA, it's capital gains free. If you haven't set up a TFSA, now's the time to do it. Gold and silver is a great way to get started in the TFSA for sure.
Before we break, do you find most people take advantage of the storage? I personally, if I'm buying, a few $1,000s worth of product, I'm not going to have it under my bed. It's not the 1800s. Like I'm not doing it that way. What do you think about that?
Well, I think it is that a lot of people, John, come for various reasons. Those folks that think that there's something on the horizon, some type of event, economic calamity that lies ahead, they may want to have it in their possession because they feel it may be the only thing that could save them. Others are content with saying, look, as long as it's liquid and I can make a phone call to buy or sell it, or I can make a phone call to come pick it up the next day, that's good enough for me. I want the added safety and liquidity, and I want to be able to keep it there, but at the same time, get all my information, have it allocated to me in my name, and keep it insured at the storage facility. I like the storage facility. I think it makes total sense. We keep the price in check with the cost of storage being only pennies per day. So ultimately, that's a great way to continue to buy and own bullion through a storage program.
More details that a little later on in the show. In the meanwhile, before a break, 1-877-323-GOLD. That's the number to reach out, educate, deltaharbor.com. We'll continue. This is Hard Money on Sauga 960. All right, welcome back. Hard Money. Good to have you along on the show again this week. Always something to be learned. It's an investment opportunity for you. We're talking physical metals, gold and silver, particularly, other ones as well. But that's our main focus on the show. Darren and Rob and Roy will give you all the details and walk you through it. As you say, Darren, hold your hand through the education and make you an expert before you even start investing in this physical product. 1-877-323-GOLD. Chances are you have not explored this very well. or maybe you know someone who's dabbled in it, but educate for yourself. It's all about due diligence and opening this part of your portfolio. Again, we talk physical metals. You can actually hold these gold bars and coins and silver bars and silver coins. It's a fantastic thing if you've never done it. But we talked about earlier interest rates going up, and this always gets people in the hair on the back of their necks. They get nervous when they think about interest rates going up, mortgage rates and interest going up. And again, we often talk about this being a hedge and protecting yourself. Give me some more details. What happens, in your opinion, Darren, if interest rates do go higher? What if? Or should I say when? Really?
When? Absolutely. No, I agree, John, wholeheartedly. And the first thing that happens is businesses and consumers stop spending, or they slow their spending. That's
Right.
for sure a great deal. And this will inevitably cause earnings to fall. So as it relates to our markets and what we watch with interest rates potentially rising, the bankers know this, that it cuts spending. And as spending gets cut, earnings fall for companies, which means stock prices start to drop. It's almost a certainty that over the last 20, 30 years, every time interest rates have risen, it leads to some type of recessionary event, but they have to use them to control this threat of inflation. It's the only tool they have. And as interest rates move up, the cost of borrowing becomes more expensive. That means the demand for lower yield bonds will drop, which is where a huge amount of money goes when we hit recession in the first place, or when we go into low interest rate environments. The bond markets have been on fire for the last decade because interest rates have been so low. But these higher interest rates will cause the bond prices to drop. How fast is your broker moving for you? How many phone calls do you get a year from your broker with their finger on the pulse telling you exactly what the next step should be? I know the answer already is that you get very few, if any. And as higher interest rates ensue, it makes loans and mortgages more expensive. Homeowners in cities with high-priced real estate, which is basically everywhere all over the country, are going to end up paying a whole lot more dollars per year on their mortgage dues on those variable rate mortgages. So if you know interest rates are going to rise next year, lock in your variables now. I mean, again, you don't have to look very far to get that advice. Everybody's saying it, but higher interest rates also affect lines of credit, as well as car and student loans, which have been among the fastest to grow since 2008. Don't think for 1 second the banks don't know this. When they got pushed away from lending in subprime in the US, they went and started attacking students and lines of credit. And so they went after seniors and reverse mortgages. This is the way they make money. They just find these avenues to gas people with all of these interest charges based on debt that was spun out from paper that never existed in the first place. In the 1970s, this happened. And when it did, home values went stagnant and lost value. Spending slowed. Economic activity slowed to a crawl. We hit recession at a time when the cost of living rose dramatically, and due primarily to rising costs, especially oil. We hit double-digit inflation. We hit double-digit mortgage and lending rates. And you know what happened to gold and silver? Gold rose almost 2,400%. Silver rose 2,000%. Both metals ran upwards for the better part of a decade. If that happens now, God, I mean, anything is possible. Anything is possible. Gold and silver could be astronomically high in comparison to where they are in price right now. And it might only take the next 60 months for that to happen.
Again, the number to reach out, have this discussion further on with Darren or a member of his team. It's simple. 1-877-323-GOLD is the way to do that. And I know this show is about hard money and precious metals. I know we talk about that, but we've had real estate experts on this show before because you are a real estate owner. You have that as part of your portfolio. And I was talking to a friend last week, and to your point about interest rates, they said, okay, fine, your mortgage rate is 1.2%, and they go, oh, that's okay. If it goes up, I qualified at 3.25%. Well, the problem is when people got that 1.2% mortgage, they went out and they bought a car, they bought a second car, maybe they bought another luxury item. Or to your point, they went out and bought something and spent more money. So they even though they qualified, well, what happens if it goes up? They've got all these other peripheral debts. They're going to sink. They're not ready for it because they don't have any backing, and they sure as heck don't have the part of the portfolio you're talking about. That should scare people. So it's not all about qualifying and getting a lower interest rate. When they do go up, how about the other crap you bought? How about that you owe money on, right?
Yeah, you do. You end up owing money in all different places, and very few people actually sit down and take stock of all that, John. They say, when the going is good, we look a lot, but it's when the going is bad that people look a little. Because we bury our heads in the sands, right? So when the going's good and the money's flowing and disposable income's there, we look at everything we're doing and we start adding it to the picture piece by piece. But as the going gets tough, we start to bury our heads. We don't look at those reports, those quarterly reports. We don't look at that statement every month like we did when the going was good. And that's what we want to avoid. That bit of education is invaluable. But to your point on real estate, before we get to the next question, I am out of real estate. I want to make that very clear to our listeners. I sold my last piece of property in the spring.
Nice.
We currently have only our primary residence. We're cash rich. We have lots of gold and silver. I have a small portfolio in stock still, but I want to be disclosure proof when we are doing this show, transparent with folks. I no longer believe in real estate at this point in time. I want to make that very clear. There are lots of reasons for it. We've done shows on it. We've had guests on this show, but I do not believe in speculative real estate at this point in time.
Wow, that's a big one. Good for bringing that out into the open for sure. You mentioned the 70s there a few minutes ago, the decade you and I were born. God, we're getting old. But you see a lot of similarities occurring right now that remind you of what happened back in the 70s.
I sure do, John. Oil prices is the biggest one, creeping up slowly but surely. Gas prices are going higher, record highs. I mean, I as part of my day to day, I need to have a pickup truck. So, of course, I want to travel a little bit of style. I drive a Ford F-150. That tank has, I took the larger tank on that. And yesterday I put in regular gas to that truck. It was almost $182 to fill the tank.
God.
Yeah, just one fill up, and so, I mean, you multiply that over multiple per year. And I do a bit of towing with some toys, and my daughter rides horses. So ultimately, we are traveling quite a bit in the summer months. When we got that truck on the road and we're going, my gas tab per year is going to be around somewhere in the neighborhood of $7,000 to $8,000, give or take, just for that one vehicle. So again, with gas prices rising, that's a huge thing. And I talked to so many people who remember that at the late stages of the 70s, oil embargoes, people lining up in the US in different places where it was hard to get gas because people thought peak gas was happening, peak oil was happening. Car prices creeping up dramatically. I saw online the other day, John, and it's ridiculous. I saw a Ford Mustang listed for $180,000. And no disrespect to Ford, but they do not make a Mustang that is valued at $180,000, at least unless it's a one-off, one-of-a-kind with a very, very exclusive motor in it.
Owned by Carroll Shelby or
$185,000 or $80,000 was the asking price for this car. What is this world coming to? I mean, this is the perfect storm. This is the season of change. So we talked about. And if you look around, that's part of that move to EVs. That's all part of that change in mentality. How do we make travel expenses not only climate friendly, but cheaper, right? Well, EVs will become cheaper vehicles down the road. It's going to happen. Look geopolitically around the world. In the 1970s, we had Russia-Afghanistan crisis. We had the Iran hostage situation. We had the FLQ problem in the 70s here. Now we have domestic terrorism. We have embargoes galore. We have multiple countries falling apart due to inflationary pressures around the world, from Greece to Cyprus to Venezuela and Iran. Ask them how they're surviving. I already know the answer. It's gold. They use gold. Well, let's get it out in the open and be transparent about it. Look up any story in Venezuela and how they survive. People that could afford it bought gold, and they're happy they did. But again, that's not to scare people into doing it. It's just to say, hey, anything's possible. So why not be as diversified as you possibly can? Gold rose to their highest of all times in the 70s based on the exact same fundamentals. But John, when we come back from break, I'm going to tell you what's even better about right now and why I think in repeating that 70s, we're going to get a much, much higher price in gold and silver now than we ever dreamed possible.
That's coming up. 1-877-323-GOLD, the number, and deltaharbor.com online to reach out as well. This is Hard Money continues on Sauga 960. All right, welcome back to Hard Money. Good to have you along this week. Always informative, always an education, and there's always that opportunity tucked in there as well. If you have not expanded your portfolio with physical metals in the form of gold and silver, this might be a high time to do so. At least explore the options. Educate yourself. Due diligence is what it's all about. 1-877-323-GOLD, deltaharbor.com. Harbor with a U. This investment is always all about you when you catch these radio programs. The video portion of it anyway, the video cast on YouTube, youtube.com/Delta Harbour. So there you go. eStore, by the way, is open. You want to explore. If you're buying maybe a lesser amount, up to about $5,000, you could do that on your tablet, on your cell phone right now. The eStore, deltaharbor.com for more details on that. But I'd love this talk about the 70s and the comparison, Darren, because different time, better music, wacky clothes, but things were eerily similar to what's going on now, right? Should not scare people, but it's good to give people a kick in the pants, right?
Well, I mean, it serves as a reminder that history repeats itself, and we need to learn from it. And opportunity knocks, right? Especially in gold and silver. And again, you remember back when gold and silver in the 70s rose to their highest of all time by January of 1980, there was a fraction of the population able to own it. And now we have a few extra billion potential investors. In the 70s, the monetary base doubled in the US due to the removal of gold standards. 71, Nixon ends the gold standard. He opens or turns on the printing presses, and they double the amount of money in circulation by 81. So that's a big move up. Well, look in comparison to what's happened now. Since 2008 and the transfer of power between Bush and Obama, the monetary base in the US has risen approximately 6 times, and nearly half of all the money ever printed in the US was printed in the last 5 years alone. So do I see similarities? Yes, I do. But the difference is, even though gold and silver have run higher in price, there is still only about 1 to 2% of the overall investing public that has exposure to it. Imagine where prices of gold and silver go when 5 or 8 or even 10% of average investors get exposure to it. And that's not even to say that's the norm. In 100 years, we've had 4 major bull markets, all of which have had 20% or higher in exposure of globally managed assets in gold and silver, whether it's paper or physical. And gold would easily, in that environment, hit 10,000 an ounce. Silver would hit 400 or 500 an ounce. I don't think it's a problem at all to see those prices and predict that that's going to happen over the next 5-10 years.
1-877-323-GOLD. That is the number. DeltaHarbor.com is the website online to start investing and educate and reach out to Darren and his team. Always there to walk you through it and sit down and have a non-committal chat about what the environment's all about and how this part of your portfolio should be opened up and explored for sure. And along those lines, Darren, how do we get some gold and silver in our hands? I mean that literally. And portfolios happening today with Delta Harbour. We promised to get back to it, so let's do it.
The eStore for sure.
Yep.
Great way to start. As you said earlier, purchases under 5,000. This is the place where you can start. It'll get shipped home to you directly. You can come pick it up, but you can shop online from the comfort of your own home, wherever you may be, the cottage, wherever you're going for the weekend. Sit down, take a look at the products, and I think you'll be very happy with that. We've done a lot of hard work on that particular part of our site. The storage option. So even if you're shopping online, whether you're buying through phone call, setting up a meeting, an appointment, you can have the option of storage. We'll be happy to send you the paperwork for that. And that gives you ease of liquidity with phone call, buying and selling. You can add or take away from your stack. You can put multiple metals in there, and you can also come and see your product. It's allocated, segregated to you. You do get inventory reports, which have your name on it. And where possible, we'll show serial numbers on your bars for that all-important safety feature of feeling I've got my bars separated from everybody else's. And it's very easy to do. In addition to that, John, we love the idea of being able to finance our product. And you can do that here through Delta Harbour. Up to 80% of your purchase can be financed. Let the market do the work for you. It's the concept of other people's money. It works very well when the markets are rising, as they have been lately and are expected to over the next couple of years. It could be a hugely popular arena of win for you in terms of your portfolio, in terms of being diversified. And you can do all of the above. But in addition to all those things, John, right now, registered accounts, that's where it's at.
Yep.
RSPs, TFSAs, LIRAs, lifts, RIFs, all of those things are very, very good ways to start up a registered account. You do the spousal, you can do all kinds of options. And as precious metals investors know, this is something we started back that are already with our firm. That is, you can't ESP this to anyone. We started this back in 2015, and how it works is very simple. Delta is the authorized bullion dealer And we partnered with Quest Trade. That's Canada's premier discount brokerage service. And through that system, clients can utilize Delta Harbour services to buy and sell physical metals within their registered accounts. We don't offer any additional services or advice relating to your investments or wealth as a whole, like an advisory status or anything like that. But Delta does help you to establish the account, open the account, make the purchase, manage the purchase, look at your account, answer questions for you about all of the options you have with product. And we talk about market expertise. So you'll know when we're selling, if you should be selling, when we're buying, if you should be buying. And it's very easy to do. You can go to our website, it tells you everything in the next steps, or have a candid conversation. Set up a half an hour discussion using our online option to book an appointment. It's free of charge, there's no obligation, but you will be more educated when you leave that phone call. You'll learn a little bit more about what we're talking about today, and you may even do yourself a huge favor by making your wealth strategy a little more diversified, stronger, and with a bit more insurance using gold and silver.
Well, it's so worth a phone call and the reach out for sure. 1-877-323-GOLD, deltaharbor.com. Again, there's so much to be gleaned and learned from just the website itself, even before you put pen to paper. But always a good thing to do to expand and look at what your registered accounts can do for you, because some of those have been lagging. Sometimes, like I said, people, it would be refreshing for people to open up a registered account. We'll use a TFSA, for instance. For an example, because people probably have some room left in there if they haven't invested or done one at all. They got almost, well, I think next year it'll be about 75 grand you can throw into one. But, you know, if you ask the average person on the street, you've said this in past shows, what's in your TFSA? How's it broken down? I don't know. I got a guy who does it. I don't know where it is. I just know it's there. But if you actually knew you had physical metals and how much and where they were, because you've taken pictures of them and you've got serial numbers and you've held it, that's a bit of a refreshing idea, bit of a turn of events, right?
It is. And that's the number one thing we start all of our seminars with. The Zoom meetings, whether it was in office before COVID, we would ask a simple question. Do you know where your money is? And most people will say yes immediately. Sure, I do. It's with RBC, Scotiabank. It's with this credit union. It's with that bank. It's this. Then we ask, well, do you know where it's parked? You know, you have a mutual fund? Yes, do. Well, where is it parked? Yeah. Well, it's parked at RBC. It's in the worldwide fund, whatever it's called. Well, that's great. Do you know where it's invested? What sectors are you in? You know, are you in health sectors? Are you in fintech? Are you in blue chips? Are you in mining stocks? Whereabouts is that money parked? And that right there stops and ends the conversation cold, John. We want to avoid that. That's why we also love gold and silver. It's not hard to understand. It's simple. It's meant to be simple. It's hold in your hand goodness, tangible wealth that you control, that you self-direct, that you get to call the shots on based on the information we're feeding you, whether it's a buy, sell, whether you want to just sit long-term and hold it. Maybe you want to pass it on to the next generation and you used your RSPs to do that. Good and you converted them over to a retirement account and you withdrew a bit of bullion. And as you were doing that, instead of taking out cash because you didn't need it, you were giving that to the next generation, feeding it to them, helping them get a good start in life. We'll talk about more of that, John, when we come back to the next segment. And also, I want to talk a little bit about bullion shortages.
Right.
Big thing right now.
We'll do that. But first, the phone call for you to write down, 1-877-323-GOLD. Simple, right? DeltaHarbor.com online as well. We'll continue. This is Hard Money on Sauga 960. And welcome back to Hard Money. Good to have you along this week. Return every week. You will educate, and eventually you'll be like, yeah, maybe I should open that part of my portfolio for some physical metals. It's high time you did that. 1-877-323-GOLD. All starts with a phone call and a conversation. DeltaHarbor.com online. You can start with the e-store, as a matter of fact, online as well, right there, and get a little bit of a taste, dip your toe, and start building that wealth portfolio with physical metals. But, you know, there has been some talk about bullion shortages and a little bit of griping and concern about that brewing. Darren, what's the latest news on that particular end of it?
Well, I can tell you that they do exist. There are some shortages. Some of it is due to the pandemic and the slowed amount of labor that's available for mints and for refiners and for product and for the movement of raw material back and forth throughout the world. And that's going to play a role for the next foreseeable number of months, maybe years, because that's part of this whole situation of supply constraints. That being said, we We work with the likes of Royal Canadian Mint and other mints around the world, and our longevity in the 18, 19 years that I've been working with those companies means we do get some favorable results. So our supply has been steady. We stick to the products we know we get: 100-ounce silver bars, 10-ounce silver bars, 1-ounce gold bars, 1-ounce gold and silver maples. We do offer more than that, but those are our staples. And primarily, those are the products we know we can get from the mint. Perfect example, this week we got about 10,000 1-ounce silver maple coins into storage directly from the mint, and that was gone. So it's already been spent and gone out to clients, and more to come. But again, our supply chain, although from time to time the cost of bullion has risen for us over the pandemic, has not been broken to the extent that we've had any major concerns. We know there's a lot of people right now in the industry, big names, big suppliers, big dealers, some of our competitors that have had some real major concerns. And ultimately, we know that there's a challenge facing us moving forward to keep the flow of bullion going as more and more and more people get excited and into this marketplace. So ultimately, this is challenging time, but again, it's not one that we can't overcome. We definitely know that there is a certain barrier that a lot of companies have to cross in order to maintain their inventory. That's all we're seeing, is that a lot of the smaller dealers can't keep up. They're having to just wait for product or put sold out on their websites. And so they'll go to subpar product or product which isn't liquid around the world, or bought from mints that, although it's decent product, are not liquid everywhere. So that's what we want to avoid. But we've been very lucky here at Delta Harbour.
I want to talk a little bit about the e-store, because I know we've plugged it a few times during the show, but it really is a simple and quick conduit for people to get started with the investment. Give me a little more detail on it.
Well, the e-store was, in fact, the brainchild of my partner, and he's seen it from beginning to end through with his project team. He's managed all aspects of it, and Rob's done a fantastic job. And we're just in the early stages of having launched this over the last week or so. We had been reluctant to do so, and there are reasons for it, which we're happy to discuss anytime a person calls. But we wanted to get out there in the public and make sure we're remaining competitive, and we did that. And I think people will be very excited. There's an ease within the transaction itself that is second to none. It makes it, as we were talking earlier in the show, a site which is capable of accepting orders through cell phones, orders through iPads and tablets, through computers, whether you're at the cottage, here, anywhere on the road. It is very easy to do. Our bill payment options are extensive. They go from everything from the top end with the higher, big, huge purchases of wire transfers. They go down to other types of purchases that include bill payments through banks. So you can do that. That's an easy option as well. And you can also do use the option of cash under 10,000. You can do checks, personal checks, which have to be cleared. Jeez. Lots of options there. You can do e-transfers, all of the standard ones that you can use there. The only thing that we avoid on the e-store to keep costs low and running that efficiently is the usage of credit cards. We just don't believe it's a good, safe way to interact, and we don't want people to have to bear the burden of higher premiums, which other sites place on orders which are using credit cards or PayPal or other features that throw in a 3 or 4% service fee. So we avoid that altogether. But the e-store is there. It's rocking. We love it. It's very easy to use. And ultimately, it's something that we think is going to be very valuable for all of our client base.
Again, explore the e-store. It's new and it's up and it's running and it's pretty robust. Do so at deltaharbor.com. Do you think, in the last couple of minutes of the show here, Darren, if the rest of the world's starting to wake up maybe and start to realize that there is a lot more risk in the economic system than they first thought?
I do think that there is a lot more risk in the economic system, John, than people thought. I think that people are underestimating where that risk is coming from. Ultimately, some of that is in the form of contagion. One topic in particular that's of great interest right now is the unfortunate situation that's developing with Evergrande. At the moment, Evergrande is in China, the second largest real estate development company, and it has its tentacles into dozens and dozens of other sectors, from sports venues to sports teams to housing to raw development to owning and renting out units. And it's a very large company, and it's swelled to the point now that they're unable to manage their own monetary debt, and that has now become a major issue. It's just one of the areas that we're watching, and that's going to translate into people having less faith in the Asian markets, because that contagion, as we saw back in 2007 and 8, is going to catch on and come over here. So I expect over the next little while, in the last few seconds we have here, to see the U.S. stock market continue to slowly surge ahead, bit by bit, because I think the money that's being speculated on in Asia is going to come over here. And until interest rates start to rise, gold and silver are going to move up right alongside of it, because Asian investors, global investors outside the US, are going to be hugely invested in trying to maintain that safe haven. So I think gold and silver do a fantastic job. And John, before we go this week, I know we're at the very tail end of the show. The cold weather's coming. I want to remind our listeners, take care of those people that are less likely to be able to take care of themselves, whether it's your local food bank, whether it's giving clothing to the shelters, or giving out that extra winter jacket you have to people who are in need. Take care of the people that are less fortunate as this colder weather starts to hit us.
Good stuff. We'll leave it there for another week. 1-877-323-GOLD is the number, 1-877-323-GOLD. And finally, the website, deltaharbor.com. We'll catch you next time. Hard Money on Sauga 960.